I'm going to be showing you how you can flip your $100 to $1,000 in 7 days using this proven supply and demand strategy. A lot of traders do think that it's not possible to flip $100 up to $1,000 in the shortest period of time, but I can tell you that it is very possible. The only thing required of you is patience, discipline, as well as a strong strategic risk management plan. So that's why in this video, I'm going to be explaining 5 strategic steps you need to follow before you can be able to do that. And number 3 is the most crucial part of it. Okay, make sure you watch to the very end. And after watching to the very end, if you find this video helpful, okay, if you learn 1 or 2 in this video, make sure you hit the subscribe button, hit this like button, share this video, and equally let me know what you think in the comment section. So without further ado, we are going to be diving and digesting into it. Best thing you need to do is to pick a volatile pair. Okay, it could be from any market, it could be crypto market or forex market, because this is literally can be applied to any market. Okay, pick a volatile market. If it's a crypto market, you should be looking at BTC, Ethereum, or Solana. If it is forex currency pairs, just be looking at the major forex currency pairs like Euro USD, GBP USD, right? So that's what you are going to be looking for, right? So, but in this particular video tutorial, I'm going to be sticking to BTC USDT, which is the crypto market, because we want something that moves, right? Like forex and crypto, these are the market that moves. We want something that moves. Okay, we don't want to be stuck on a market that doesn't move. Okay, that is number what? That is number 1. Okay, so now we are on BTC USDT chart. Okay, now the second step is to map out our zones. Okay, map out our supply and demand zone. How do you map out our supply and demand zone? This is where we now go to higher time frame, because in this particular strategy we are equally going to be applying top-down analysis before refining to get our entry. Okay, but the goal here is what is to actually flip $100 to $1,000, so it can give us a high probability trade, right? So heading over to 1 day time frame, as you can see in this on this chart, right? This is 1 day time frame. So we can see that the market is the overall trend is what? The market is downtrend. Okay, the market is actually a downtrend. As you can see, this trend line here, this is a trend line that indicates the market is downtrend. But the current reaction of the market is actually pulling up to what? To a particular zone. That particular zone is what we need to map out. Okay, that particular zone in which there is a rejection in the market, that's where we are going to be looking at. Okay, so this particular zone, around this zone, so we now go to 4-hour time frame to see what the market is doing clearly. Okay, so at this point, market did a sort of a rejection here. There's a market rejection at this particular zone, which is the supply level. Remember, when the market is downtrend, we should be looking at the supply level to sell from there. Okay, but when the market is uptrend, you should be looking at the demand level to buy from there, because you don't want to trade against the trend. Okay, so you want to follow what the trend is doing. So in this case, BTC USDT is a downtrend. Okay, so we want to be looking at a particular zone to start selling. So we start following what the market is doing, so you can start making our profit or our money, right? So right here, right? So what the market is doing here is you can see the rejection at this particular zone. Okay, so this is the first rejection, and we can now see another rejection here. So that particular zone is where we have our supply level, also known as strong resistance level, and that's why I use this rectangle tool to map it out. Okay, let me do that again, so for you guys to see. Okay, start from here, map it out like this. Okay, this is our strong supply level. Okay, this is where the price is most likely to reject, as the price is currently going up. Okay, as the price is currently going up like this, you can see the direction of the market is actually going up to that level. Okay, to actually start selling. Now, for us to get our entry, okay, we want to refine this particular market. So we go to 1 hour time frame. Okay, this is 1 hour time frame. This is 1 hour time frame. So we want to get an entry that is not going to expose us to too much risk. All right. So this is it. This is 1 hour time frame. Okay, like this. Okay. So we are anticipating for the price to get there, so we can take our entry, right? So that's now bring us to the number 3. Okay, the number 3, which is the most important of them all. Okay, so number 3 here is to wait for reaction. You need to wait for extra confirmation of the market, what the market is doing, when the market finally get to that particular zone. So here, you don't want to be an aggressive trader. You want to actually be a conservative trader, okay? You don't want to trade aggressively because we want to stick to what our discipline as well as risk management plan, okay? So when the market come to that particular zone, don't rush, okay? Let price come to your zone. Show rejection. The price must show rejections as well as the candlestick slowing down, maybe a pattern like double bottom or double top, okay? In this case, that is a supply level. So we are anticipating for what, or maybe we want to be looking out for a double bottom. So we want to be looking out for a double top, right? Which is the MO pattern, right? So that's what we want to be seeing on when the market gets to that zone. Then we can now confirm that, okay, the market is about or is most likely reversing to the downward side, right? So which is the number 3, okay? Now, let's say we pick our short position to here, okay? Put our short position and wait for the market around that POI, which is point of interest, okay? Put our entry around that particular zone. Now draw our stop loss, okay? Draw our stop loss. And this will now bring us to the number 5, which means tighten our stop loss because we don't want to expose, like we don't want to, make our stop loss to be so big. No, we want to actually make it a refined stop loss, okay, with a tight risk. Now, remember that $100 you want to risk in the market, make sure it's something that you can afford to lose, okay? You don't want to, have all the $100 put in the market, knowing fully far that $100 is all of your money, and if you lose it, you can't bear the risk. So make sure the $100 is something you can bear if it goes wrong. That's why I say risk the $100 to make $1,000 using this strategy, right? So that's just it. So with a small stop loss and high risk to reward, so as you can see, put our stop loss somewhere around here, but make sure that your stop loss is above the previous swing high, right? This previous swing high around here, this one, make sure your stop loss is above it, okay? At least with a small cent, something like that, okay? Now you can now aim for full take profit, like you can now aim for take profit at the previous at the previous demand level, which is the overall demand level, okay? You have mapped out, this is our supply level. Where is our demand level? This is our demand level, right? So this is our demand level around here, right? So let me map it out. This is our demand level. So we should be aiming for take profit. Since the market is downtrend, we should be aiming for take profit around that level because market will definitely take the price down there and eventually continue the downward movement, right? So here we now draw our short position to that particular level like this, okay? Remember, it has to do with patience. It's not something that you can do in a day or in hours. You have to hold it for a particular days, like for some particular days, probably before a week, this trade must have executed, right? So as you can see, the risk to reward here is up to 11.2 risk to reward. Now, for us to maybe adjust our stop loss so that it can be like round number of 10 risk to reward, okay? So which is 10.6 risk to reward. So if we are putting $10 in this trade and eventually hold this trade, okay, till it gets here, which will not take nothing less than a week, okay, that means you have already flipped $100 to $1,000 because 10 times of $100 is what? $1,000. 10 times of $100 is $1,000, right? So, but then number 5 is a method or a step that I call the fast way, okay? This is where you compound as fast as possible. You can even make that $1,000 before the price hits your full take profit if you stick to this number 5, which is flip your profit into next setup, right? Don't overtrade, which is very, very important. How do I mean by it? Flipping your profit into the next setup? Let's say the market that is currently coming down, okay? Market is coming down, okay? Now, and it's breaking structure to the downside. Upon every break of structure, you look for an entry on the newly supply level that form, right? So that's the secret. Upon every break of structure, okay, let's say the market gave us double top and break structure to the downside. Upon every break of structure like this, here is the newly formed supply level. You should take your entry here, another entry with the profit you're already making. If it is a Forex, we call it stacking, okay? But if it is a crypto, you can equally follow it this way, okay? So you take your entry here. So let's say you are making $10 already from this trade. You can use that $10 to enter another trade, okay, upon the seeing of the newly formed supply level, and you can use it to enter another trade. From there, if the market breaks another structure to the downside, you can enter another trade. Upon every break of structure, you enter another trade. So you can see the original money you have is $100, which is making profit for you. Now you are now using the profit the market have already give you, okay, to make extra profit. So by then, in less than 7 days, you can see that you have had accumulated profit compounding itself, because you are using this particular strategy to trade this particular account. As simple as that. Though it might not look so simple until you tried it out. So I want you to let me know if this is something that can work for you, or if you have tried this kind of stuff before and it didn't work for you, or if you are yet to try it but you are too skeptical about it. Let me know in the comment section, and don't forget to subscribe to this channel. If you watch to this very level, make sure you subscribe to this channel, like and share this video, and I can't wait to see you in the next one. And if you have any video in mind you want me to make, maybe a particular topic you want me to make about the video, just drop it in the comment section equally, okay? I'm glad to, and I will also attend to that. All right, so I can't wait to see you on the next one. Peace.